Quick question. Are you accidentally overpaying in taxes? If you're a small business owner, chances are the answer is yes. And the worst part, you probably don't even know that it's happening. I'm not talking about loopholes or gray areas. I'm talking about real legal deductions you're missing, all because your books aren't set up the right way. Today, I'm going to show you how disorganized accounting quietly costs small business owners thousands of dollars, and how putting a simple system in place can help you keep more of what you earned. Remember, there's two ways to make money: increase revenue, decrease costs. I'm Sean, CPA and founder of Ledger Ready, and I help service business owners confidently get in control of their finances. Let's jump in. Most business owners don't mean to overpay the IRS, but it happens every year. Here's how. You're scrambling at tax time, so things get missed. Expenses go uncategorized or dumped into miscellaneous. Sound familiar? You don't do any planning mid-year because your books aren't up to date. And when your books are a mess, your accountant plays it safe. That means fewer deductions, higher tax bill, more stress. Let's walk through some common examples that I see. Meals and travel. You take a client out. That lunch is partially deductible, but you lost the receipt. Or maybe it's buried in miscellaneous, so your accountant skips it. That's money left on the table. Home office. You work from home, but don't track your square footage, utilities, or internet. So instead of real expenses, you take the standard deduction and miss hundreds in savings. Equipment. You buy a laptop, great, but it's not logged or documented, and your accountant never gets the info. So guess what? It's not depreciated and you lose another deduction. These seem small, but they add up fast. All right, here's what most people don't realize. When your records are incomplete, your tax pro does not have time to go hunting. They file what's safe. That means no gray area, no questions from the IRS, and fewer deductions for you. But the bigger issue, this isn't just a tax problem, it's a business visibility problem. You're making decisions without knowing where your cash is going or what's around the corner. Here's another thing business owners don't realize. The IRS estimates that small business taxpayers should spend about 24 hours on average preparing their tax return. So think about what that would mean. If you're paying your tax preparer upwards of $400, you're talking about a cost of a tax return, just the preparation, between $8,000 and $10,000. So how I know most taxpayers are not doing that, and most tax preparers, they're not getting that kind of preparation time out of their tax pros, is it just doesn't take that long, first of all, to prepare it. You get them what they need and they turn it around the next day, which is unreasonable considering how many other clients they may have. And also, they're not charging you that much. If you're looking at your tax preparer and they're charging you $2,000 or $3,000, they are not spending 24 hours preparing your tax return. That means you're not paying for tax planning. You're paying for simple tax compliance. That's not the preparer's fault. They're under the gun too. But it means if your books aren't clean and your financials aren't structured, they're just not going to spend the time digging through your records. They're going to do what's safe and fast, and you'll likely miss out on deductions or strategy you should have had access to. Now, I know what a lot of people are thinking. A lot of service business owners just say, I just want to be conservative. And that's another way of saying you're being too safe. So in missing out, you're overpaying for no reason at all whatsoever. Now, if you've ever asked, can I afford to hire someone right now? What will my cash look like 3 months from now? Or why is tax season always a surprise? then what you really need is structure. Forecasting, even a basic version, gives you that. It shows what's coming in and going out, where you're exposed, when to set aside cash for taxes, and how to make decisions confidently, not reactively. And it also creates a clean record for your accountant, so you can actually use those deductions instead of losing them. So, I know what you might be thinking. I hear this all the time. Sean, this all sounds great, but I don't have time to build a forecasting system. That's why I built one for you. It's a free tool built specifically for service businesses, and it helps you get started with forecasting in under 15 minutes. No jargon, no fluff, just a real world tool you'll actually use. Grab it using the link in the description for this video. You'll be able to plug in your expected income and expenses and instantly see when you're at risk of a cash crunch, when you can reinvest, and whether or not you're on track to meet your goals or to pay your taxes. Let me leave you with this. You don't have to become a CPA. You don't have to memorize the tax code. I haven't. It's way too long. But you do need a system. Accounting isn't about being good at numbers. It's about having control over your decisions and building a business that lasts. If you found this helpful, hit like, tap subscribe, and check out the free forecast tool below. I post new videos every week to help service business owners like you stop guessing and start making confident financial decisions. Let's go. All right, see you in the next one.